Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from First Citizens Bankshares, and trust me, it's more exciting than it sounds. Think of it as uncovering a financial treasure map, or maybe just figuring out why your bank statements look the way they do. We are looking at a Form 8K report, and the date that kicked everything off was March 6, 2025. Here's the headline: First Citizens Bankshares, a big bank, just issued a whole lot of new debt. We're talking over $1 billion, a cool $1.25 billion, cool one bought instead of one bank lending the money. Lots of investors do. But the money with interest, think of it like taking out a huge loan, but instead of one bank lending the money, lots of investors do. There are two types of these notes. First, they sold $500 million of senior notes with an interest rate of 5.231%. This rate can change. They call it fixed to floating, meaning it starts at a fixed amount, but later it can go up or down based on market conditions. These notes are due in 2031, meaning they have to pay them back then. Second, they sold $750 million of subordinated notes with a higher interest rate of 6.254%. This rate is fixed to fixed, which means it will not change. These are due much later in 2040. Subordinated means that if the bank goes bankrupt, these note holders get paid back after the senior note holders. That higher risk is why they get a higher interest rate. To do all this, they use something called a registration statement that was already on file with the Securities and Exchange Commission, or SEC. This is like having the paperwork ready to go before you decide to sell the notes. This registration statement included many important documents. Big names like Citigroup and JP Morgan helped them sell these notes. They acted as underwriters, which means they helped find investors to buy the notes. All of these notes are governed by legal agreements called indentures. Think of these like the fine print on a loan agreement, spelling out all the terms and conditions. If you're super interested in the nitty-gritty details, you can actually find all these agreements as exhibits attached to this report. Exhibit 1.1 is the underwriting agreement, which basically says who is involved with the bank and the underwriters. Exhibit 4.1 shows the senior base indenture, an agreement between the company and US Bank Trust Company on the rates and procedures for these senior notes. Exhibit 4.2, subordinated base indenture, dated as of March 4, 2020, between the company and US Bank Trust Company. This basically says that in the event that the company goes bankrupt, this debt is subordinated, which basically means it is lower in priority than other debt, and the holders of this debt will be paid after the other lenders. Exhibit 4.3 shows first supplemental indenture to the senior base indenture, which shows modified rates. Exhibit 4.4 shows second supplemental indenture to the subordinated base indenture, which shows modified rates for the subordinates. Exhibit 4.5 contains the actual form of the 5.231% senior notes due in 21. Exhibit 4.6 shows the actual form of the 6.254% subordinated notes due in 2040. So what's the big picture here? First Citizens is raising a lot of money through debt. They're betting they can use this money to make even more money by lending it out or investing it. The interest rates they're paying are pretty standard for the market right now. The risk, as always, is whether they can make enough profit to pay back all this debt, especially if the economy slows down. Now for my take, First Citizens looks like a pretty solid bank. They've been around for a while and they seem to know what they're doing, but taking on this much debt always carries risk. One thing I'd be watching closely is those floating interest rates on the senior notes. If interest rates go up a lot, First Citizens' cost will go up and that could squeeze their profits. Also, the fact that they're issuing subordinated debt suggests they might be a little worried about future cash flow. Otherwise, they probably would have just issued more senior debt at a lower rate. Overall, First Citizens seems to be making a calculated bet on the future. Whether it pays off depends on how well they manage their business and how the economy performs. Only time will tell. Thanks for watching. If you found this breakdown helpful, please hit that like button, leave a comment, and subscribe for more corporate deep dives. See you next time.